Google gets 7-day extension to modify Play Store. A U.S. court granted Google an additional 7 days, extending the deadline to October 29th, to implement changes to its Play Store ordered after the Epic Games lawsuit. The mandated updates include allowing third-party billing options and alternative payment systems outside the Play Store. Google argues these changes could create security and privacy risks for Android users. The delay gives developers and Google more time to adapt to a new App Store model that could reshape mobile app monetization. Industry experts say the ruling could encourage more competition and reduce Google's dominance in app distribution, while also raising new regulatory and cybersecurity questions. Apple challenges EU's big tech rules. Apple has officially filed a legal challenge against the European Union's Digital Markets Act, DMA, arguing the law imposes disproportionate and intrusive obligations. The DMA forces major tech firms to open up their platforms to smaller rivals and third-party services. Apple claims this undermines its privacy and security features. While the case is in the EU, U.S. analysts see it as a broader signal of resistance by big tech against global regulation. The outcome could influence upcoming U.S. antitrust debates and shape how far regulators go to control digital platform monopolies. Apple maintains it supports competition, but not at the cost of user safety. Amazon Web Services outage disrupts internet for 15 hours. An Amazon Web Services, AWS, outage lasting more than 15 hours caused widespread internet disruption worldwide, affecting platforms such as Snapchat, Fortnite, Slack, and even some U.S. government portals. AWS blamed a technical configuration error in its Northern Virginia data center region. The outage exposed how dependent global businesses are on a handful of cloud providers. Lawmakers renewed calls for more cloud infrastructure diversification and stronger federal oversight. Amazon apologized and promised safeguards to prevent future issues. Analysts say this event could accelerate multi-cloud strategies among American companies seeking resilience against single-provider failures. U.S.-China tech tensions rise after new trade rule. Washington's latest export control rule targeting Chinese semiconductor and AI firms has triggered sharp criticism from Beijing. The U.S. move tightens restrictions on high-end chip technology and adds more Chinese companies to its trade blacklist. China's Ministry of Commerce condemned the decision, calling it economic coercion. Analysts warn the policy could worsen global supply chain disruptions and raise prices for tech hardware. For U.S. companies, the rule increases compliance risks and limits access to key manufacturing partners. The dispute underscores the growing tech Cold War between the world's two largest economies, impacting everything from chip design to smartphone production. Study finds AI chatbots fail mental health ethics tests. A new Brown University study revealed that many AI chatbots offering mental health advice violate core ethical guidelines. The research tested leading chatbots and found they often gave unsafe or unverified responses, even when prompted to use evidence-based therapy techniques. Experts warn this poses serious risks for users seeking emotional support online. The study calls for federal oversight of AI mental health tools and better transparency in data training. Developers are urged to build strict guardrails to ensure safety. As AI-based wellness apps grow rapidly across the U.S., regulators may soon demand stronger ethical compliance and user protection measures. U.S. startups continue strong funding momentum. Despite economic uncertainty, American startups secured robust funding this week. San Francisco-based Chatule raised $1.5 million in seed capital, while multiple AI and biotech startups reported successful Series A rounds. Venture capital investors say innovation remains strong, particularly in AI workflow, video, and health tech sectors. Analysts note the funding boom shows investor optimism in the next wave of automation and digital transformation. However, founders are advised to remain cautious, as higher interest rates and tighter credit may affect valuations. Overall, the data points to a healthy, evolving startup ecosystem in the United States heading into late 2025. U.S. tech firms ramp up hiring. Major U.S. tech firms including Cloudflare, MongoDB, and AVSBL have launched new hiring drives in October 2025. Demand for software engineers, cloud infrastructure specialists, and partner-facing roles remains strong, even amid economic uncertainty. Analysts say this suggests selective expansion rather than mass layoffs, indicating stable confidence in the sector. Recruiters highlight that AI, cybersecurity, and data analytics roles are in particularly high demand. As the U.S. prepares for a year of rising digital infrastructure investment, these companies aim to secure top technical talent. Job seekers in the technology field see 2025 as a solid rebound year for employment. New 4K broadcast camera debuts at NAB Show New York. Kokusai Denki Electric America has unveiled its new Z HD 6500S 4K broadcast camera at the 2025 NAB Show New York, emphasizing precision and improved color capture for professional video production. The launch reflects continued innovation in the broadcast and streaming equipment market. With the growth of live event streaming and OTT platforms, hardware manufacturers are investing heavily in 4K and HDR imaging solutions. Experts say the new camera will appeal to production houses, sports broadcasters, and studios upgrading to ultra-high-definition workflows. The debut reinforces America's role as a key hub for broadcast technology advancement and creative industry equipment launches. Tech stocks lift U.S. markets ahead of earnings week. The Nasdaq Composite and S&P 500 rose sharply as investors bet on strong tech sector earnings from giants like Apple, Nvidia, and Microsoft. The rally reflects renewed optimism in AI-driven revenue growth and semiconductor demand. Analysts expect big-cap tech to dominate corporate earnings season, while smaller firms may face pressure from higher costs. Market strategists say investor enthusiasm remains strong for companies leading AI infrastructure and cloud computing. However, caution persists around valuations. The week's surge confirms that tech remains the engine of the U.S. stock market, influencing sentiment across multiple investment sectors. Nvidia and TSMC produce first U.S.-made Blackwell chip. Nvidia and TSMC have jointly unveiled the first Blackwell chip wafer produced in the United States, marking a major milestone in domestic semiconductor manufacturing. The announcement aligns with the U.S. government's CHIPS Act goals to reduce dependency on overseas chip fabrication. Nvidia said the new Blackwell architecture will deliver significant performance gains for AI and cloud computing workloads. Analysts see this as a turning point in America's tech supply strategy, boosting job creation and technological self-reliance. The move is expected to strengthen U.S. leadership in AI hardware innovation while deepening strategic partnerships with major chip producers. Silicon Valley's 996 work culture gains ground. A new trend is emerging in Silicon Valley startups. Employees are embracing the so-called 996 schedule, working 9 a.m. to 9 p.m., 6 days a week, similar to China's controversial tech industry practice. Startups in AI and robotics say the intense hours are necessary to maintain global competitiveness. However, labor advocates warn it could cause burnout and violate labor laws. Some workers view it as a temporary sacrifice for faster career growth. The debate highlights cultural shifts within the American tech scene as companies chase AI breakthroughs. Regulators are watching closely to ensure fair labor compliance across the industry. News Corp warns AI firms over content use. News Corp CEO Robert Thomson warned that AI companies are undervaluing original content while overinvesting in chips and data centers. He criticized major AI developers for training models on copyrighted material without proper licensing. Thomson urged tech firms to compensate publishers fairly or face legal action. His comments reignited the debate on intellectual property rights in the AI era. Media executives across the U.S. support stronger content protection measures. Experts predict more licensing partnerships and lawsuits as the line between journalism and generative AI continues to blur. The statement adds pressure on OpenAI, Google, and others to pay for content use. Senator calls to break up big tech after AWS outage. Following the global Amazon Web Services outage, U.S. Senator Elizabeth Warren renewed her call to break up big tech firms. She argued that Amazon's dominance in cloud infrastructure represents a national vulnerability. The 15-hour outage disrupted financial services, hospitals, and transport systems. Warren said such dependency on a single provider proves the need for stronger antitrust enforcement. Lawmakers are considering new rules to promote competition in cloud computing. Amazon, meanwhile, pledged improvements and transparency in its systems. The debate highlights growing bipartisan interest in limiting corporate concentration across the U.S. tech ecosystem. Calix launches AI broadband platform on Google Cloud. Calix Incorporated, a U.S. broadband technology company, unveiled its agentic broadband platform built on Google Cloud's AI and data infrastructure. The platform will help service providers deliver personalized and predictive customer experiences using AI-driven analytics. Calix said the system marks a breakthrough in how broadband networks operate, enabling automation and real-time decision-making. Industry experts say this reflects a broader trend of integrating AI with telecommunications to improve speed, reliability, and customer retention. The collaboration with Google Cloud positions Calix as a key innovator in next-generation connectivity solutions across the United States. Travel tech firm Navan targets $6.5 billion IPO valuation. U.S. travel tech startup Navan Incorporated is preparing for its NASDAQ IPO, targeting a valuation of about $6.5 billion. Formerly known as TripActions, the company plans to raise nearly $960 million to fund international expansion and AI-driven travel management tools. Navan's listing signals renewed confidence in the tech IPO market, which had been quiet for much of 2024. Analysts say a successful debut could reopen the pipeline for other U.S. startups seeking public listings. The move reflects investor optimism in the business travel and expense management sector as corporate travel rebounds post-pandemic.